we're seeing US home supply rising. It's now at the highest level since May 2020.
Yeah, and I mean it's not massively surprising. You know, the higher for longer policy at the Fed, combined with that kind of aggressive rise in 10-year yields, have been keeping mortgage rates pretty elevated. The average interest rate for a 30-year fixed rate mortgage in the week ending the 23rd of May was 6.98%. So that was the highest rate in 4 months. So that's going to have an element of demand destruction associated with it. Combine that with the, I think, broader uncertainty, even though we have seen an improvement in consumer confidence. The housing market's sticky. It's a big purchase. It's something you would probably be reluctant to go out and buy if there was any sort of uncertainty. So I think, it makes sense. Just waiting on actual house prices to correct lower, because that's not happened just yet.
Yeah.
But yeah, this is a clear bearish signal in the property market.
I guess the two things to consider here are how are credit conditions, and as we discussed earlier in the show, we expect credit conditions perhaps to be, getting tighter in the future, high 30-year mortgage rates, etc. And then what it comes down to is if consumer confidence is actually higher, as I'm skeptical that it may not be in some senses, is that consumer confidence that has supposedly been high, is that a short-term consumer confidence or is that long-term consumer confidence? Because people are quite often happy, say the S&P's been performing and they can look at their, X number of thousands of dollars that's increased 10%. They might be happy to go and purchase a new white good, or whether it be washing machine or something even more extravagant like an electric car. But housing is even more of an investment. So if they're not confident in their job going forward, and that sort of 30-year consumer confidence meeting 30-year fixed rate mortgages, then I think you will see this dislocation
for sure.